Welcome to The Explainer. Today, we're diving into a really fascinating look at one of the most incredible, enduring success stories in modern finance. We're looking at a premium finance documentary that breaks down exactly why Warren Buffett just keeps winning. If you've ever found yourself wondering how someone manages to stay at the absolute top of the investing food chain, not just for a couple of good years, but across entire eras of economic history, well, you're definitely in the right place. We're going to break down the anatomy of his unbelievable success step by step.
Okay, let's dive into this. Section 1. 60 years of winning. Decades of market mastery.
60. We're talking about more than 60 years of active investing. I mean, just imagine being in the market, watching things soar to these crazy euphoric heights, the dot-com boom, the wild housing bubble, and then watching those very same markets inevitably come crashing down. Now imagine doing that over and over again for 6 whole decades and coming out as one of the most successful investors in human history. This isn't some flash-in-the-pan, overnight success story. It's this massive, sustained track record of resilience through literally every conceivable market condition. So looking at a timeline like that, the natural question we have to ask ourselves is simply, how?
Well, mathematically speaking, you just can't chalk it up to luck. There's no way. You do not survive a 60-year timeline by chasing hyped-up flavor-of-the-month trends. Warren Buffett didn't build his incredible fortune by trying to get rich overnight. The real secret sauce here, it's entirely rooted in a ruthless, unyielding discipline.
Section 2. The Value Investing Philosophy. Finding the Fundamentals.
So, what does this kind of unyielding discipline actually look like in practice? Basically, it comes down to identifying the ultimate trifecta of a strong business. He's looking for companies with a durable competitive advantage. Think of it like a protective moat that guards the castle, or the business, against rivals over the long haul. You combine that with a highly capable, trustworthy management team running the show, and a business model that promises substantial, predictable earnings way into the future, and boom, you've got yourself a classic Buffett target.
Now, Buffett is obviously the poster child for value investing, which is looking for businesses whose long-term value might be greater than what the current market price suggests. But the real genius here isn't just knowing the textbook definition, right? It's having the psychological fortitude to actually pull it off. It's that incredibly rare ability to look right past whatever crazy panic or wild euphoria is gripping Wall Street on any given Tuesday and objectively measure what a company is intrinsically worth. It's a complete psychological decoupling of today's price tag from long-term value.
And this brilliantly illustrates the stark contrast between the average investor and an absolute master. While the crowd is getting whipped around by the roller coaster of short-term noise and hype, Buffett is completely ignoring the ride. He maintains this laser-focused dedication to the underlying realities of a business. Frankly, the guy is way more likely to be sitting quietly, drinking a cherry Coke, and reading a tractor manual to deeply understand a company than he is to be panicking over a daily stock chart.
Section 3. The Power of Patience. Time as a Force.
In this philosophy, time isn't just a measurement on a calendar, it's an active, powerful tool. Think like a long-term business owner rather than a short-term trader. Honestly, take a second and look at your own habits. Are you constantly buying and selling? Are you checking your stock app every hour? Buffett shifts this mindset entirely. If you buy a farm, you don't turn around and sell it the next day just because it rained. You own it for the long haul. You let time do the heavy lifting for you.
Let's move to and see how this builds when you practice that level of patience, because you unlock the sheer, undeniable math of wealth. Year 1, your initial investments begin to grow. By year 10, your returns are being consistently reinvested. And by year 30, compounding has taken over completely. Check out this wild fact. The vast majority of Warren Buffett's immense net worth, literally over 90% of it, was accumulated after his 65th birthday. That is the incredible mathematical reality of allowing wealth to compound uninterrupted over decades. Patience literally pays off.
Section 4. Your circle of competence. Avoiding unnecessary risk.
Now, what's really interesting about this slide is the realization that you can't let your wealth compound for 30 years if you lose it all on a bad bet in year 5, right? And that is exactly where the circle of competence comes in. This principle restricts you to industries and companies you truly, deeply understand. If Buffett doesn't understand the underlying technology of some trendy new tech startup, he just ignores it entirely. It requires an unbelievable amount of ego control to say no to a stock that everyone else is getting rich on simply because it sits outside your circle. But inside that circle? Oh, he's hunting for a bulletproof business model. He wants companies with fortress-like balance sheets and gushing cash flow, paired up with a product that creates consistent, almost habitual demand year after year.
If a business can marry that kind of unshakable financial stability with unwavering customer loyalty, it becomes a prime target for his portfolio.
Now, let's take a step back and acknowledge reality for a second. No investor wins all the time. Even the Oracle of Omaha has had years of poor performance and made some bad calls. Markets act irrationally. Unpredictable things happen to the very best of us. The big takeaway here isn't about achieving absolute perfection. It's understanding that ultimate success comes from thoughtful, consistent decisions over decades, not batting 1,000 every single day.
Section 5. The ultimate investing lesson. Discipline over trends.
So the crucial point is how all of these pillars tie together. The core thesis of this explainer is incredibly simple on paper, but remarkably difficult to execute psychologically. Maintain your discipline, practice relentless patience, and deeply understand the businesses you own. The biggest lesson we can take away here is that successful investing is really about mastering these fundamentals rather than frantically chasing every new trend that flashes across your newsfeed. I want to leave you with a provocative thought to kind of challenge your own mindset as we wrap up. Are you actually investing with discipline and patience, or are you just chasing the next market trend? Seriously, take an honest look at your strategy. If you enjoyed this deep dive and you want more clear, straightforward explanations of investing, economics, finance, and business, be sure to hit subscribe to Economic Frontier. Thanks so much for joining me on this explainer, and remember, keep focused on the fundamentals.